Corporate Administration. Chapter 1. Introduction to Company. Introduction. After the Industrial Revolution, the proprietorship and partnership forms of business organizations suffered some difficulties like less capital, lack of managerial ability, lack of continuity, increasing competition, fast-changing in technological environment, and unlimited liability leads to formation of large-scale business as form of joint stock company. This form of business organization capable of mobilizing large amount of capital with provision of limited liability and efficient management. So joint stock companies came into existence on the 1st of April 1956. Meaning of company. Company refers to a voluntary association formed and organized to carry on business. This is an organization or collection of individuals, whether natural persons, legal persons, or both. Meaning of joint stock company. Sec. 566 of Companies Act, 1956 defines, a company is an artificial person created by law having a separate legal entity with a perpetual succession and a common seal. According to H. L. Haney, a joint stock company is a voluntary association of individuals for profit, having a capital divided into transferable shares, the ownership of which is the condition of membership. Module 1 Introduction to Company. Meaning of company. A company is a legal entity formed by a group of individuals to engage in and operate a commercial or industrial enterprise. A company may be organized in various ways for tax and financial liability purposes depending on the corporate law of its jurisdiction. Definition of company. Professor Haney, a company is an artificial person created by law, having separate entity, with a perpetual succession and common seal. Features of a company. 1. Incorporated association. A company is required to be registered under the Companies Act 2013. Any association of persons that are not registered and subsequently incorporated with the Registrar of Companies is not recognized as a company at all. 2. Separate legal entity. A company in the eyes of the law is distinct, separate, from the people who constitute it. It is capable of enjoying rights as also subject to duties under the law. A company can also own and deal in property and other such assets. One point to be noted is that the company is not the agent or the trustee of the subscribers, it has its own distinct legal identity. 3. Limited liability. Since a company has its own legal identity, its members are not liable for its debts. The liability of the members of a company is limited to the unpaid share of their share value. There are some companies limited by guarantee, where such a guaranteed amount determines the liability of each member. 4. Transferability of shares. The shares held by a shareholder of a company are transferable by nature. So the ownership in a company can be transferred in accordance with the manner provided in the Articles of Association. In a private company, there may be some restrictions placed on the transfer of shares. But the right is not taken away completely. 5. Perpetual existence. A company is an artificial person, so it does not have a restricted span of life. Death, insolvency, insanity, retirement, etc. of any or even all of its members does not affect the status of a company. 6. Common seal. Directors of a company are essentially its agents. So when a director acts within his powers, a company is bound by his actions. The common seal is like a signature of the company. The directors use the seal to sign documents on behalf of the company. So until there is such a seal on the documents, they cannot be enforced. Highlights of Companies Act 2013. The new Companies Act 2013 passed by the Parliament received the assent of President of India on the 29th of August 2013. The Companies Act 2013 contains 470 sections, 29 chapters and 7 schedules. The Act introduces significant changes in the provisions related to governance, e-management, compliance and enforcement, disclosure norms, auditors, mergers and acquisitions. Major highlights of the Companies Act 2013 are presented below. 1. Private company can have a maximum of 200 members, earlier limit was up to 50. Clause 2, 68. Corporate administration. 2. New concept of one-person companies has been introduced. One person can also form the company. One-person company need not to hold any AGM, annual general meeting, for each year. 3. The maximum limit of directors in the company has been increased to 15 with a power to add more directors upon passing of special resolution. 4. Resident director. Every company shall have at least one director who has stayed in India for a total period of not less than 182 days in previous calendar year. 5. A person cannot become director in more than 20 companies. Out of this, cannot be director of more than 10 public companies. G. 6. The financial year of any company can be only from April to March. All companies have to follow a uniform financial year, i.e. from the 1st of April to the 31st of March. 7. Woman director. Every listed company, public company with paid-up capital of 100 crores or more, public company with turnover of 300 crores or more shall have at least one woman director. 8. Concept of CSR introduced. For companies having net worth of 500 crore or more, or turnover of 1,000 crore or more, or net profit of *5 crore or more during any financial year. Above specified company need to spend at least 2% of average net profit of immediately preceding 3 financial years for every financial year. 9. Provisions for compulsory rotation of individual auditors in every 5 years and of audit firm every 10 years in the listed company. 10. The books of accounts may be kept in electronic form and voting through electronic means at the shareholders' meeting introduced. 11. Loans to director. The company cannot advance any kind of loan, guarantee, security to any director, director of holding company, his partner, his relative. 12. Articles of Association. In the next general meeting, it is desirable to adopt Table F as standard set of Articles of Association of the company with relevant changes to suit the requirements of the company. 13. Disqualification of director. All existing directors must have Director's Identification Number, DIN, allotted by central government. Corporate administration. 14. Appointment of statutory auditors. Every listed company can appoint an individual auditor for 5 years and a firm of auditors for 10 years. This period of 5/10 of a year commences from the date of their appointment. 15. Internal audit. As per draft rules, it is made compulsory for below-mentioned class of company. 1. Every listed company. 2. Every public company having paid-up capital of 10 crore rupees. 3. Every other public company having outstanding loans or borrowing from banks or financial institutions exceeding 25 crore rupees or accepted fixed deposit of 25 crore rupees or more at any point of time during last financial year. 16. The books of accounts may be kept in electronic form and voting through electronic means at the shareholders' meeting introduced. 17. Financial statements. Financial statements are now defined under the Act as comprising of the following. All companies, except one-person company, small company and dormant company, are now mandatorily required to maintain the following. A balance sheet as at the end of the financial year. B. A profit and loss account, an income and expenditure account for the financial year, as the case may be. C. Cash flow statement for the financial year. D. A statement of changes in equity, if applicable. 18. Independent directors. The 2013 Act defines the term independent director. In case of listed companies, 1/3 of the board of directors should be independent directors. There is a transition period of one year from the 1st of April 2014 to comply with this requirement. 1. One-person company, OPC, one or AG. Kinds of companies. One-person company is defined in subsection 62 of Section 2 of the Companies Act, 2013. One-person company means a company which has only one member. Section 3 of the Companies Act, 2013 classifies OPC as a private company for all the legal purposes with only one member. All the provisions related to the private company are applicable to an OPC, unless otherwise expressly excluded. Corporate administration. 2. Private company. The private limited company is a joint stock company. However, it is governed under the ambit of the Indian Companies Act, 2013. It is formed by voluntary association of persons with a minimum paid-up capital of 1 lakh rupees with the maximum number of members is 200. 3. PUBLLIC Company. Section 271 of 2013 Act, Public Company, means a company which, A. is not a private company, B. has a minimum paid-up share capital of 5 lakh rupees or such higher paid with unlimited members. Capital. 4. Company limited by shares. A private company limited by shares means that the company has shareholders and that the liability of the shareholders to creditors of the company is limited to the capital originally vested. A shareholder's personal assets are thereby protected in the event of the company's insolvency, but the money invested in the company will be lost. 5. Company limited by guarantee. A guarantee company is a type of corporation designed to protect members from liability. A guarantee company does not distribute profits to its members nor divide its assets into shares. Members of a guarantee company pay a specific sum of money to participate, i.e. clubs, sports associations, students' unions and other membership organizations, workers' cooperatives, social enterprises, and non-governmental organizations, NGOs. 6. Holding company. A holding company refers to a company which does not produce goods or services itself. Rather, its purpose is to own shares of other companies. It is a company which controls another company by holding a minimum 51% of shares and thereby controlling the composition of the board of directors of other company. 7. Subsidiary company. A company which another company holds a minimum of 51% of share capital is known as subsidiary company. In simple, subsidiary company is a company owned and controlled by another company. 8. Government company. A government company means any company in which not less than 51% of the paid-up share capital is held by the central government or by any state government, or partly by the central government and partly by one or more state governments. Corporate administration. 9. Associate company. Associate company is a corporation whose parent company possesses only a minority stake in the ownership of the corporation. An associate company is partly owned by another company or group of companies. 10. Small company. Small company means a company, other than a public company, whose paid-up share capital does not exceed 5 million or whose turnover as per its last profit and loss account does not exceed 20 million rupees. 11. Foreign company. Foreign company is defined as any company or a body corporate incorporated outside India which has a place of business in India, whether by itself or through an agent, physically or through electronic mode, and conducts any business activity in India in any other manner. 12. Global company. A global company refers to a company that operates in more than one country or that operates in foreign countries. It can be also referred as a multinational company or transnational company. 13. Body corporate. Body corporate is defined in Section 2(11) of the Companies Act, 2013. This includes a private company, public company, one-person company, small company, limited liability partnership, foreign company. 14. Listed company. Firm whose shares are listed, quoted, on a stock exchange for public trading. In simple, listed company means a company that has listed ordinary shares. Top 10 listed companies in India. 1. Indian Oil Corporation Limited. 2. Oil and Natural Corporation Limited. 3. Reliance Industries Limited. 4. Tata Motors Limited. 5. Bharat Petroleum Corporation Limited. 6. Tata Steel Limited. 7. State Bank of India. 8. Hindalco Industries Limited. 9. Hindustan Petroleum Corporation Limited. 10. Assisi Bank Limited.